Well, that was an extremely wild weekend. We have a lot to cover today. Bitcoin, of course, having a bounce back, but the fear hasn't entered the market. We're also looking at the reaction from the traditional markets as they open this morning, or at least morning our time here, evening, Sunday evening your time over in the US. We've got huge things on the interest rates, looking like they're going to go for their first interest rate increase. Yes, you heard that correctly. Their first interest rate increase in September of 2024. And of course, the update with the, not the cars, but the breaking war situation happening in the Middle East. So today's video, I've got a lot to cover, especially around Bitcoin and the outlook over the next sort of 1 to 6 months. We've obviously seen two pretty decent days down, at least for BTC, but for altcoins, they've been absolutely annihilated. So I want to go over the macro picture again and how this relates to obviously the macro picture for BTC, and then of course give you some insights for altcoins again, as I had done in yesterday's video that were out there on the beach. So you know the deal. Let's go 3,500. I know you guys are really enjoying this particular type of content, a nice quick look through the markets, but then going into detail in those specific pieces of Bitcoin and the stock markets as well. So much appreciated. You want to know more, links in the top of the video description for TIA Premium. All right, let's go. We've got the news updates here for the war. I'm not going to go into this too much detail. There really hasn't been anything else there apart from Iran sending over missiles across Israel. Now, I will get into what is happening in the US stock markets based on this, because you would expect that World War III is breaking out, and now's the time for a major collapse and that sort of thing. I mean, look, it's not a regular thing that happens in Israel, of course, but we've seen it, well, some of us have seen it before, where they get strikes and then Israel's Iron Dome basically just destroys everything else out there. So it's not new per se. It's a difficult topic, obviously, to discuss, but the reason I bring that up is due to the reaction from the stock markets this morning. We haven't really seen anything substantial in terms of a drop. Now, I know the US will open Monday morning their time for the open session, but for the futures market, they have opened now for the last 3 or 4 hours, and we've seen a little bit of a rally up here, and then basically just come back to where it was. That's for the S&P 500. For the NASDAQ futures, it hasn't even broken the lows set 2 weeks ago, or 10 days ago, right? The Dow Jones, it also didn't break Friday's low yet, but it possibly will in the session coming up tonight. Russell 2000, that has dropped, but of course these are the laggards. So these are the stocks that everyone was trying to get in on because the market was already up and they were looking for something that was cheaper to get into. They decided to get into the small caps, and now they've been crushed, essentially down from these highs where everyone was getting in late March into early April. And now they're down solid from the top here to where we are now, about 6% or so, taking them back to previous numbers around January and February. So this is what happens when you get into a weaker stock or a weaker crypto. You're basically going to get crushed when the market goes down. And when the market goes up, you're not going to make the same sort of gains that the strong assets have been making. That's typical of every single market throughout time. So we're looking at the forecast here for the rest of this quarter, April, May, June. Essentially, it's a bit of a sideways consolidation here before we continue on for roughly Q3, pull back into late Q3 around where the election comes in, and then happy days, November, December. But I think there's going to be a lot of undecided things going on throughout now and that period into sort of October, November that will probably test a lot of new investors thinking that this market is ready to collapse again. That's not my view. My view hasn't changed. Markets will still close higher in 2024 than what they opened with. And I did put a post out on that in January of 2024 on X if you want to have a look at that. Now, something else I put out in January of this year was the interest rates. Maybe you've caught on to this by now. The market was expecting a cut every single meeting, but look at what we've just seen. We've just seen a potential hike in September. So what does this mean to the market? I suspect that the market is going to have to get used to either interest rates staying where they are for longer or the possibility of an interest rate rise. Interest rates have been too cheap, even though the masses, you would have heard it, I've heard it many times before, that everyone's expecting an interest rate cut this year. Just wait, just hold out. There's going to be a cut. Everything's going to be okay again, or at least we're going to be able to afford things again. That's not what happens at this stage of the market. We're in the winner's curse phase of the 18.6-year cycle. And yeah, I know I always come back to the 18-year cycle and I point to it and sort of move on, but unless you've got another 2 or 3 hours to spend with me, you're going to have to go back and watch some of the videos or read the book, The Secret Life of Real Estate and Banking. That's the book to go and read to understand the 18-year cycle. There's over 200 years of history for this cycle in the US and over 300 years of history on this cycle in the UK. So this is for the real estate prices and the economy. That's why I reference it so often. I've been following this since around the lows here. Around 2012 is when I found this cycle. It has been bang on. So thanks to Akil and Phil from Property Share Market Economics. So Phil Anderson, you might have seen him on my channel before. This is legendary, and we've still got further to go in this bull market to the upside. So that's why you probably won't see interest rates come down much, maybe one or two cuts. But I think if that was to happen, you'd see things, well, asset prices skyrocket, and then people will start to flock back into more of the asset prices, which would then cause the interest rates to go up again. So I think it's going to be, the market's going to have to get used to those interest rates staying up where they are or go higher for this longer period until the end of this cycle, which at which point they'll then have to start to cut because real estate prices won't be going up forever and something will break in the economy, and that's when they'll have to start cutting. So that's the period there. All right, so that's the stock market look. I haven't seen much of a reaction so far for the first few hours of the open here after the weekend, which leads me to believe maybe this is somewhere around at least a temporary low. Obviously, we've had one day, an inside day, and now today's open here on Monday. It's got a little bit higher. I don't think the move to the downside is over yet, but this could at least put a pause in the move for now. What we typically see are extreme news events often marks market lows. So it's very important to watch. That's the message I put out in yesterday's video. So keep an eye on these prices here. It's 60,800. The low on the 20th of March, so around your equinox, another seasonal date for you guys playing the GAN seasonal dates at home. It's come in right at that bottom. So $100 off, pretty damn close in terms of a percentage, barely anything, 0.08, okay? The next low here is at 59,200. So I'm paying a lot of attention to these numbers. This could then bring in further downside should we see that low taken out. That is the March low, the lowest price that March had for the month, which would then swing the Bitcoin chart down. Yep. This is what I got here. You've got this yellow line in the background. That's the TIA GAN swing indicator. This helps us identify the trends in the market over all timeframes, over all markets that you have a chart for. If you want to understand more about this, there is a link in the top of the video description. You can check that out. 7-day free trial for this. This has been one of the key tools that you've seen me use to identify that maybe this could be coming to an end for now, not for the entirety of the bull market. As I've showed here, I think we still have a lot longer to go in the bull market, probably till at least 2025 for Bitcoin and cryptos, because they're a lot more speculative than real estate, of course, in the economy there. But just heading back to this, these were some of the major points that I was looking at as to why Bitcoin would potentially at least pause, put in a trading range. Meanwhile, the majority of people were saying Solana to 500 or 1,000 or whatever, or Bitcoin to 100 grand, or ETH to 10 grand. It just seemed like it had to happen because we're a few days out now from the halving, which is due on, say, Friday or Saturday of this week. It could still happen. We could still have a run up, but I'm still very much watching around high 70s to low 80s, which were where those next price resistance levels were. So around 78 to 81,000, as I've put out, there are the 50% extensions to that point. So if you find yourself in a position of not knowing what's going on, take a look at this. We've got 6 months up in a row in the swing and 7 green months. So 7 green months here. This I've posted several times before, so just a quick update. You got 4 green months, 3 green months, that equals 7. 7 green months in a row. We've only seen one other time, which was 2012. So what comes after this? That's what I'm getting to. I just want to show all the probabilities and why this takes time and why people really hate hearing it. And yeah, you sort of comments back in mid-March where I'm saying, look, I think it's probably getting very, very extended. Not like it can't go much higher, but I think those hopes of a mega altcoin season, probably not yet, but I think there is one coming. Essentially, all I'm saying here is that was showing many, many signs that we had to at least pause, or maybe we'll see some sort of correction in this move to the upside, in this wave 3, potentially putting in a wave 4, at which point we'll get a pretty significant wave 5, or at least that's the idea so far. So we've got the 6 months up. That's only happened 13.8% of the time. So that's in the swing, higher highs, higher lows, 13.8% of the time. So if we went to 7 months, if April was to break past 73,800 and not break down from around 59K, then that would put us in the 7% here. So only 7% of the time have we seen Bitcoin do 7 months in a row in the swing. That's over the entire history of Bitcoin. So that's stacked against us. 7 green months in a row stacked against us to do 8. Not like it can't happen, but it's again stacked against the odds that we would see another green month in a row. And also the turns. I've got March, April here as a possibility. So you saw that when I talked about what's coming up for April at the end of March. So I did my April forecast there. We've seen in the past around this period, sort of that March, April peaks in the market, but also sort of April or June-ish. And that's what we saw at the previous run. So this one here into 2019, then the market cooled off, which I want to get back to this as well. We had a June peak here, pretty significant correction in the bull run. You had a March top in 2017 at the old all-time high, just went slightly higher, pulled back, and then took off again. You had a June top here, you had an April top, and the market cooled off. And so from those cool off periods, we've seen 5 months of cooling off in a trading range. That range is going to be quite significant because, of course, back then Bitcoin was a much, much lower price. You were between 60 and $150 that is. So, but the point of this is the timing. About 5 months of consolidation before we went on a final streak to the end of the cycle. Back through 2015, 2016, again, you had 5 months. They were all on the index here. They were all months that had lower highs and higher lows. So it got very tight and pretty boring. I'll say it again, pretty boring. There was like no volatility. You just kept getting a grind before the market broke out again. Then you had another 5 months, more volatility in this 5 months, so more movements up and down, more people would be talking about it. That's essentially what it all leads to now. And then you had the breakout, but you still had to endure 5 months. 1, 2, 3, 4, 5, then the breakout. 1, 2, 3, 4, 5, then the breakout. We can also look back to the peak in August 2012. You still had 4 months, 1, 2, 3, 4. It just started to break out on the 4th, and then the 5th month it took off. We've also seen 6 months of a decline, so there was still a lot of emotion there. It was just declining, but there wasn't really like a sideways grind. And coming through to the most recent one in 2023, that was almost a 7-month grind. There was a lot of emotions involved in that 7 months, but essentially when you look back, it was just going between $25,000 and basically $31,000 for about 7 months. So if that is to occur, if we're to get 1 month, maybe up to 6 months, because what we've seen in the past, so that 5-month period. 5 months would take us out to October, which would then lead us very close to the election. So within that period, maybe we do see more grinding, probably more emotions, because as the ranges get tighter, any sort of small swings bring a lot of emotions to the market, or at least the traders thinking it's the time it's going to go up, but it doesn't. Or it's the time it's going to crash for the bears, but it doesn't. So keep that in the backs of your mind. This seems like it is working out to be that period where we might go a little higher, might go a little lower. We've talked about $50,000 to $80,000 range for Bitcoin, somewhere within that period. We'll know more should we break down from the 59K, then that would put less possibility of us breaking to $74,000 in this particular grind period. So that's why I'm still on the fence with this range. I'm using $50,000 to $80,000 for now. But the good news after all this is that we haven't yet seen the end of the cycle. Obviously, in my opinion, I think there's still a fair bit of time to go. And this move could be similar to what we saw in 2019, not in terms of where we sit in the cycle, but in terms of the emotion and what people were thinking at the time. 2019, if you weren't around, this move into June happened so fast, so quick. It was like 300%, similar to what we've seen in the market now, 25 grand to 74 grand. And many people were thinking this was a left translated cycle where basically you would see a top early and then fade out for a long time. Obviously that didn't happen, but because of the extreme move, the market did grind around for quite a long time. You had 6 months down, a couple of months up, COVID happened, 5 months up, another correction, and then the market took off into this major bull market. So I'm keeping several options open here, especially when we consider what happened in April of 2021. So similar sort of playbook here where we've seen a top in March, lots of excitement to try and get back to $100,000, which I don't think is happening now. And then you saw this lower high form at $72,000 so far. And then May happened in 2021, you saw the collapse. So I'm not suggesting that we need to go on a 50% collapse from here, but similar sorts of emotions have evolved at this point. And so if we were to see a rejection, roughly around $67,000, between that 67 and 69 being the old all-time high, then I suspect we're going to come back down. More emotions are involved here. Everyone gets extremely bearish again, and that is what allows the market to at least consolidate between your sort of $50,000 and $70,000 rather than consolidate between $60,000 and $80,000 as an example. So that's why we need to watch to see what happens at $59,000 to $60,000 and also that $67,000 to $69,000. Should we get a rejection, well then we're probably going to come back down and break through the $60,000 low. Another reason for that is the fear and greed index. We're still in greed after the weekend of war breaking out and all this sort of news headlines, which also, if I get the right chart up here, means we are still at one of the longest periods, or the least amount of fear in these markets. See, I've summed it up better here on X, where I said crypto fear and greed index is still in greed, slightly higher reading than yesterday. Bitcoin is still not seen extreme fear in over 15 months, and this is the longest on record. Typically, you would see something like this in the market by now, some sort of significant correction to wipe out the extreme greed. And so layering the charts that I've just showed you here with the 3-day down signal, which I didn't even get to, which you guys have seen before. So show the bar type. This is what allowed us to talk about the possibility that we're going to see a longer grind than what everyone had anticipated, especially at these lows. When I said the low is not in here, it's about $100 off now, right? But I said the low is not in here, and everyone's like, buy this dip, and essentially it went to 71, 72K, and now it's come back down. So that is a pretty strong signal. Still 32 days below the old all-time high. Keep that one as well in the backs of your minds, especially the movement down from that all-time high. Layering that on top of everything I just talked about here and here and here, looking at these peaks that have happened pretty similarly. It all sounds like a bad scenario, right? But if this is to occur and we are to grind out between these levels, 70 and 50, that is going to give us more time to shoot up to new all-time highs, a bigger and better altcoin season, a right translated cycle sometime, who knows, late 24, early 25, maybe it extends out sometime later date in 2025. We don't know yet. We need to see how this consolidates, and then that's going to give us another idea of how far forward we could move. That's all going to be good news. If it is a shorter one, we get a month down or 2 months down here, it's still going to be a pretty reasonable time to consolidate, and maybe we do go on an even bigger run. But it is feeling like that 2019 pump mixed in with that 2021 pump. It needs some time to cool off. Just how long? 2021 was about 2 months at the lows, and 2019 was 6 months down, and then of course even more months sideways. I think that's going to depend on this week ahead and whether Bitcoin is able to break down from the 5960K, especially over this week and the last week of April. That is a really key level. 5960K, do we get rejected at 67, 69 and work our way back down? I don't have the answers to that yet, but I am keeping a very strong watch on those levels there. The invalidation, breaks above 69K, consolidate above those levels, almost all bets are off. If that is to happen, we get back above 69 and we start to shoot higher. We'll get to that if it comes. But for now, obviously, we've got more important levels to worry about for Bitcoin. Now, I'm going to get into alts in another video this week, looking at some of the stronger stuff here, looking at Solana and how that's holding up, looking at ETH BTC and how that is breaking down. So make sure you hit the subscribe button, like the content. We're doing amazingly well. So thank you very much for all your support, guys. 3,500 likes. Thanks again for all of your support. I'll see you guys at another video. Take care and peace out.